All right, so it's currently 12:29. This session is for anyone that wants to get into trading leveraged assets and leveraged products within the marketplace, whether that's on the future side, whether that's on the Forex side, or even on the CFD side, options, any of those. So we're going to be using this demo account here that's on your screen as sort of educational purposes. And we're going to be advancing into a website called tradingview.com where I'm going to show you how the future side of things trade. So let's just jump right into it. Trading leveraged products, you usually have some sort of leverage provided by the broker that you're using. So there's usually a platform that brokers have, and there is the broker themselves. So the platform that we're using on these sessions is MetaTrader 4 and TradingView.com. Some brokers have their own platforms, like TD Ameritrade has Think or Swim. There is various different platforms out there that your broker can provide to you. I prefer to use MetaTrader 4. I'm very used to it, and I know how to navigate through it. I'm also very comfortable with TradingView. So with my futures broker, I use TradingView. With my CFD broker, I use MetaTrader, and then I do my once in a while options trades on Robinhood, which is all app based from your phone. So every broker gives you some type of leverage. My broker gives me 1 to 500. What that means is pretty much for every dollar that I put in, the broker will lend me $500. Meaning if I put in a trade, I can borrow $500 from the broker's money, which I never see. It never reaches my hands. But pretty much he allows me to use his money to generate a profit or a loss, and the only thing that's reflected on my account is the profit or the loss. I never see any of the money that he's letting me borrow. But the way that it works is usually you have something called equity, you have margin. There are certain margin requirements for certain position sizes and trades. So, with that being said, I'm gonna dive into MetaTrader over here and sort of show you how MetaTrader works. But usually when you open up your platform, you'll have this market watch over here on the left hand side, and this little exclamation point is something called spread. And this number that you're seeing over here on the side is the spread of the asset that you'll be trading. Right now we have NASDAQ open, so if I find NASDAQ on this list, it's right here. The spread is 11 pips, which is 1.1 handles, which is the difference between the bid and the ask price, these two numbers right here. And what that's saying is the black line and the red line. So the difference between this line to that line right now is 1.1 handles. On session, during session, meaning 6:30 to 6:30 a.m. PST to 12:30, 1 o'clock PST. We're in the US session, so the spread on NASDAQ and the rest of the indices is going to be very tight. Now, we're on the CFD charts. If you're on the future side of things, you won't have spread. However, you'll have something called commission. Fortunately, with the broker that I use, there is no commission. It's just spread. There is some brokers that are on the CFD side that have spread and commission. So all of these things are things that you want to know when you're coming in to decide on what broker you want to be trading with. But basically what it is there's a spread, and this is the position size over here. CFDs, foreign exchange, we trade in lot sizes. So NASDAQ, I have a 5.0 set right here. For demonstration purposes, I'm going to make this a flap 1.0. So 1.0. So this is a standard lot. And basically what it means is for every handle that this thing moves, it's going to be up or down $100. So if I were to click a trade, if I'm clicking buy, I'm expecting price to move up. If I'm clicking sell, I'm expecting price to move down. Now, depending on where you click it is where the price is going to land. If I click the buy button, it'll trigger me at the red line, which is the ask. And if I click the sell button, it'll put me in at the bid, which is the black line. So on initial entry, you're always going to be down the spread. Now, for demonstration purposes, I'll click buy. Oh, hang on. So I'll click buy. And you see my position lines on the screen. Buy 1 lot worth of NASDAQ. Now I'm down the spread. You could see. It entered me at the red line, and the black line is what I'm down right now. And as soon as this price crosses through here, anticipating for price to move on higher, this will change. Now, since we have a position on, it's a good time to talk about these numbers down here that you'll be seeing on your screen, which is the balance, which is the money that you have within the account. The equity is the balance plus or minus the floating position. The margin is what my broker requires to enter a 1.0 lot size. So for 1.0, they say, oh, you need $8,435 to enter the position. The free margin is the margin minus the equity, and that gives me the free margin. The margin level percentage is just a percentage for the broker to understand how large of a position you're in and if they need to liquidate your assets. What that means is you'll be getting a margin call. Anytime my broker says, hey, if you go to 50% margin level percentage, we're going to close out your positions to protect ourselves because we don't know how you're going to manage this. So if you over leverage on your account, you'll see this gray box down here go red. So the way to, you never want to be in an over leveraged position. You always want to be, properly risked in the situation that you're in, and you want to manage your risk, and that's a big part of being a profitable trader. Now, if I'm in this trade, I can always close out my position by hitting this little X button right here. But you can see right now, as price is playing out, we're up three handles, so it's up $300. And as price goes in our direction, it'll make more money over here. If price comes against us, then we're wrong. Now, what if I want to limit my loss? I know that if price comes down to, let's say, these areas right here, this level, then I'm potentially wrong. I want to see it expand to higher prices from here. So how can I set a level there that will kick me out of my position and just lock in that loss very minimally versus allowing it to come all the way back down against me and potentially lose me a lot more money or even blow the account? So what I can do is I can click, drag, drop. And what that does is it enables a stop loss. Now, if I float over the stop loss, it's going to show me how much I would lose. Since this is 17 handles away or 16.9 handles away, if price were to go back there, I'm going to lose $1,700. But it's a lot better than letting price come all the way down here and losing $8,000. So for the purposes of that, let me just leave the line there. Now, let's say that I have a clear take profit, an area where I just want to get out of my position. This is where the market was supposed to go, and this is where I want to exit my position. What I can do is I can click, drag, drop in the direction of my profit, and what will drop is a take profit. If I hover over the take profit, it's going to show me how much I would make if price made it to take profit. In this case, 55.4 handles away, which is $5,000 away, $5,547 away. So if I'm anticipating long, once again, I enter buy and they'll enter me at the level that the price is at. If I'm anticipating short, it'll be the reverse. So let's demonstrate the short. I'm gonna close out this position with a $200 loss right here. Click it, done. Liquidated, it's done, it's over with. Now the account I lost $200 is at 99,788. If I enter the sell from here, this is the sell. Maybe I want to put the stop loss right above, and maybe my take profit can be down here. So if I go take profit 23 handles away, that's $2,395, and then stop loss is 8 handles away, which is 824. Now, what if I don't want to risk that much? What if I'm somebody that wants my account is not 100,000? What if I have only $500 in there, or $1,000, $2,000? Well, you would just adjust this position size to reflect on the position that you want to drop on your account. So let me close out this position right here, and we'll do a demonstration with a smaller position size. So we had a 1.0 set. We're going to go down to 0.1, which is 10 times less than what I had on before. So maybe I want to enter this position right here with the buy. And we see down here that the margin that I'm using is 10 times less than what the 1.0 was, which is $843. And if I drag the stop loss is only going to be $239. If I drag the take profit is going to be $200 for a 21 handle run up. So you adjust the lot size according to what your account size is. If you're trading a small account, you want to use smaller lot sizes. If you're trading a big account, you can still use small lot sizes, or you can use bigger lot sizes, depending on how confident you are in the setup. So let's carry on. So I'm just going to close this out. This is the gist of how MetaTrader works, how you can execute positions and manage your positions accordingly. Always use a stop loss. Understand where your take profit is. One thing that I do want to address is how to take a partial, meaning that you close your position partially, not all of it, but you close a portion of your position. So just for demonstration purposes, let's put on a buy, or we'll enter a sell. And let's say I want to close a portion of this position. I would come here, right click on the position, go modify or delete, and this pop-up is going to show up, and do market execute, come up here, go 0.5. For example, I want to close half the position. Closes out half the position. So now I've reduced the position to 50% of what it was. Now, if I want to set the stop again, set the stop, set the take profit, and you can leave it be like that. So if it hits take profit, it'll be $600. If not, hit stop, we're going to lose $390. So this is how you manage the positions. Now, something that I want to talk about is market orders. If you right click on the screen, you can put a buy limit, meaning that if price pulls down to this level, it'll trigger a buy over here, anticipating for price to run back up afterwards. If I put on a sell limit, delete this. If I put on a sell limit, it's going to be the reverse of that. So if I come above where price is at, right click, it's going to show me sell limit. I can put on a sell limit, meaning price can pull up to there, trigger me, and then drop from that price level. So buy limit is price comes down. Buy limit is price comes down, triggers me. I'm anticipating for it to go up after. Sell limit would be price goes up, triggers me. I'm anticipating for it to come down after. So these are the various limit orders that exist within the market. As you can see, we're getting fairly close to the take profit that we have set here. So hopefully it triggers and you see how it'll trigger and clear out the position that we have down here. Let me delete all of this. Another market order that I want to talk about is buy stops and sell stops, meaning that a buy stop would be if price comes back up and goes through this area, then I want to see it trigger a buy right there. And a sell stop would be the reverse. If it drops down through this area, I want to trigger a sell right here, anticipating for price to follow through and continue to drop. So if it's a stop order, you want to see it go through and trigger the position that you're anticipating. And if it's a limit order, you want it to go there, react, and come the opposite direction. I hope that makes sense and that's clear for everyone. I don't want to sit here and wait to see if this is going to take profit. So I'm just going to close out the position manually because I want to shift gears into the future side of things. So this is the CFD and Forex side of things that we just discussed. And now we're going to be shifting over to the future side of things. So again, future side, we use something called tradingview.com. You can come down to the trading panel down here and see a list of brokers. These are all the brokers that are offered on TradingView. You can always open an account. You can hit this button and it'll bring up a lot more brokers, a lot of different places that you could be trading and link it to your TradingView account. For demonstration purposes, we're going to be on the paper trading account. So we connect to this and we come down. And now we can execute positions on this chart accordingly. So same idea, same chart. We're looking at NASDAQ once again. I'm going to zoom in so you can see it more clearly. This is going to be the position size up here. So you're going to come up here and you're going to put in the quantity that you want to trade. 100 on this will be like a 1.0. But for demonstration purposes, let's just do 10, which would be a 0.1 on that MetaTrader chart that we were just on. So if I want to enter a buy, I would click the buy button. Buy shows up. You have your stop loss, click drag drop, or the take profit, click drag drop. And you can adjust these by going here, hitting modify, and then you can adjust it accordingly. If you want to close a portion of the position, you would hit this trade tab down here and you would come here and you would type in, let's say we have 10 on, I want to close 5 out. So I would put it at market order. See, market order, limit order, stop order. So if I want to market order, I would put 5, I would hit sell, and it reduced my position by 5. Now, if I wanted to, let's say, put a stop right here. Here, we'll put it right here. 16,857. So we would do 16,857. We're gonna have a buy stop right there or a sell stop. If I put a sell stop, it'll clear out the rest of my position. On the future side of things, you can't have two opposing directional positions. You can't have a sell on and the buy on, or a short and a long. You need to close out one side of it in order to enter the other side. On the CFD side, it'll allow you to hedge the position, meaning I can have a sell up here and I can have a buy up here at the same time. But in this particular case, I can't enter a sell until my buy is cleared out. So if I were to come in and do market order 10 and hit market 10 sell, it's going to close this position and enter me into 5 contracts right here to go short. Watch. You see? Closed out that position with the profit that we had, and I can always set the stop loss, always set the take profit. If you hit this button right here, it'll reverse the position. So now we're in the buy again, and you adjust accordingly. Now, if I have a buy and I want to set a stop loss manually, I can right click, come trade. I could do sell stop. So this is going to be my stop loss down here. Doesn't show up because TradingView's demo account doesn't work that way, but you can always adjust them manually also. So stop loss, take profit, and there you go. So to conclude this session, just wanted to say this is a review or an intro to entering leveraged asset trading. This is the Fox and the Maniac trade. You can follow us on Twitter. You can subscribe to our YouTube channel, like this video if you liked it. Hopefully, you know, some of you watching this video decide to join our live sessions where we come in, mark out the charts with our team, execute live trades, call it out for the team, help you manage the risk in between, and, you know, eventually become a profitable trader. Until next time, enjoy your day.